all, Ben here, East West. Going to take a look at uranium in this video. The retracements are underway, the ones we were looking for last week, which give us our steady building blocks for higher prices. So let's just jump in and take a look. So just going to start off here looking at the seasonality chart for URA. Of course, I've looked at these before. We've got to be a little bit careful with what we look at because if we don't have a lot of price history, then the seasonality chart doesn't really tell us too much. We need a fairly good sample to make it statistically relevant. Now, what we do know, and we see this across the space, of course, is that this is day 218, and we have began to enjoy a rally. And of course, as we look over history from about day 231 of the year, that tends to be the season to be jolly as the song goes. So do not expect a tremendous rally like this. It could happen, of course, but we are starting to just dribble up a little bit, of course. A lot of water to go under the bridge, but certainly we do have seasonality on our side. So this is where we were at last week. The only really thing we were looking for is a retracement. Now, I refashioned this trend channel. I said last week, it was just a short-term sort of guide thing. So, as the market develops, I just keep redrawing that. Now you might sort of say, oh, but what about this pivot here? Shouldn't you be paying attention to that and therefore the trend's broken? Well, maybe you better. It's not. It was never a very good trend because there wasn't a lot of touch. There was something very tight in here. The main point was we looked at this little gap in the market that we've nearly filled in. So that's not a bad thing because that was what we were looking for, right? We wanted this retracement. And we haven't quite got down to the 50 off this pivot. Nothing says we have to come down to the retracement zone, but like I said, this is what we're looking for. We're looking for a move back down, which we've just about got. We may not get there, and then we need to once again come up and defeat this area. That looks like the key area moving forward. As a recap, this area represents the point of control of this move down. Okay, so that is the main point of control, which lies on top of the 50% retracement of the overall move and also 61.8% of this move down. So that is quite key for me, and we're not there yet, but I said last week the way I wanted to see it get there is steady building blocks, okay, and we're getting the start of that, so that is a good thing. I also mentioned I was looking for a light volume retracement, which is what we're getting, but of course we are going to need to see some volume come in and start pushing this higher. Okay, we need some fresh participation as we come in off these sort of retracement levels that we're looking for the market to reach. So we need to see if it just comes down and just tests this, which is not a bad thing. It'd close the gap, test the 50, and then if we could get some volume starting to come in to buy this higher, well, that would be the sign that we want to see. So will we get that? We'll see through next week. So looking at the seasonality in CCJ, this one's probably a little bit better because the history's longer. But once again, it looks like it's conforming. So day 218 is when we started to push up. Of course, 231 is the day that we can expect the market to have a good run historically. As an aside, I am in the process of trying to build one of these overlays for TradingView. It's a little bit difficult because TradingView becomes quite limited in the way it handles a lot of data. I am working on it. Hopefully I can get something together that you can lay over the top of not just a uranium chart, but basically any chart to give you some sort of idea of the seasonality. Keep your eye out for it. But once again, this is telling us the same thing, that the seasonality is beginning to come into play. Okay, so we'll just whiz over CCJ. So we were talking about I've talked about it for the last 2 weeks, that this area was pretty important just for the market initially, so it's proven. So my crayon drawings have proven accurate, which has been more accurate than what the pumpers have been predicting. So look, this just looks classic, right? So you've just got this wick through the area just in to test this, where the volume started coming in, as has been pointed out. This churn where the market was supported and then it failed and we've come up and tested. Okay, so this is not unsurprising. This is classic support becoming resistance. So we do need to break that pivot. So that becomes important in the meantime. But this is just doing what we wanted it to do. This is what we're talking about, right? You need a rally and a pullback. You need something sustainable. So now we're getting the pullback. So nothing else changes here. We're still short of the retracement zone. we've got the points of control, and this remains the ultimate point to try to get above. But we had a push, okay, and we failed, and now we're just dribbling back on not too much volume. So we also quickly talked about the RSI. So for me now, I really want this thing to hold 40 on any sort of pullback. So yeah, we've just getting above 40 doesn't mean that we're out of the woods. It just means that in a bullish market, you would expect the RSI to travel between the oversold area, which is just off my chart a little bit, travel between the overbought area of 40. That's what you want to see the RSI do, because it means that throughout this entire campaign of upward movement, the up bars are bigger and more powerful than the down bars. That's what that represents. In a bearish market, it's the opposite. Okay, the down bars have power. So this is not it's not the 10 commandments set in stone. It is just a marker. So as we just come in and look at this now, this little trend that we were looking at's gone. We can get rid of that. We'll fashion a new one, but this is all short-term stuff. So we were just looking at the structure of the measured moves. So we're looking at the measured moves last week, and within the structure of this movement up, okay, so this movement up, there was quite a few, and this is how the market structures itself in terms of making higher highs, higher lows. Here's the first one, right? Just a small one, up, retracement, target. Okay, there's one. So here's the next one, up, retracement, target. Okay, so there's the next one. If you didn't want to play that short term, you could take it off this bottom, okay? And there's another one there, right? So up, retracement, and there's the target. And you can see the reaction that the target of the market turned away. Coming off this low, we got up here, we retraced it, we broke. Okay, so that one would have been a broken one. But if you now come off this pivot, okay, there's another one there, up, retracement, target. Next, we broke on this one. Okay, so this one we broke. So now the sequence is kind of breaking down a little bit. As we get up here, we're too low. So, the sequence kind of broke through there, which to me, I just read that as going, okay, well, that means that this movement's probably up, and now we're in for a bigger retracement. So I just come off the bottom, because that, on the big picture, is what I'm looking at. Okay, so we're not quite at that retracement, but this is doing what we want it to do. Okay, so we teased up here. Okay, and so now what do we want to do? We want to just come back and test this retracement. Okay, so we left a little gap in the market. We're only on an hour here, of course, but we left a little gap in the market. That's filled in. Don't have to worry about that. Now, there is actually a teeny tiny little daily gap in the market down here. So, this is the sort of thing I wouldn't mind saying. And like I said, nothing says it has to be filled, but I've shown statistically that they do fill in more often than not. This would be nice. Okay, I think that in terms of your building block, that's kind of the retracement that I'd be looking for. So will we get that? I don't know. We'll see. You look at the volume profile just for this run up here. Where's the point of control? Right on where that little gap is. Okay, right into this churn. Okay, back into the retracement. So you can see, this is kind of like doing what you would hope. Like I said, you just got to lay out the markets, and then I'll just leave this, and we'll see what happens next week. The only possibility that I'm not so concerned about, but I'm just wary that we could just go into a range here. So we'll just have to see how this develops. I mean, this is just a possibility. We don't know if that's going to happen, but that would be a little bit frustrating, I'd imagine. If that happens, we'll just have a look at the structure, see if we can pick up some sort of Wyckoff style schematic, and if we can, we can work off that. If we can't, we'll just work with what we can deal with. So that remains the plan. I'm not anticipating this. It could happen, and the other thing that could happen, of course, is that it could just do this. Not impossible. So let's just see what happens into next week. Okay, so URNM, don't really need to spend a lot of time on this because it is doing the same thing. We had this little gap that's been filled in. That's great. We just came up to the point of control here for the move up. Okay, so this point of control, this volume profile, okay, is represented of this move. Is the move up to here. Okay, so we're just coming back to test. So this is all going together as you would hope so far, and this becomes the retracement zone that we're looking for. So we didn't quite make it, but we might just dribble down into it next week. And then, of course, this becomes the first point of call on the way back up, which is the first retracement of this drop. Okay, so we're a little bit, we are above the point of control here, but the volume profile for here is not as good because it was a free fall through here. Okay, so there wasn't a lot of volume. So we just look at the retracements and of course the trend channel. So we're just trying to get on the other side of this. Maybe just I'd like to see it tickle down ever so slightly. Just get into these areas and just touch them and then ricochet away. We'll see next week. Of course, nothing says that it doesn't continue on the way down. We are definitely not out of the woods yet. But this is still what we were looking for, what we were talking about last week and what we were looking for, okay? These fancy crayon drawings that suggest to us that the market has moved up, it can retrace, retest, and go on. That is the building block, okay? That is what an uptrend looks like. That is the building block. So we will see. Just thought I'd take a quick look at Denison here. So, like down to the trend line that held quite well through most of 2023 and into 2024. Nah, man, just another dip to buy. Ran out of gas. Bang, down. Okay, so looking at that structure, that's what, as someone who follows Elliott, not slavishly, but certainly use it if it helps me. That concerns me just a little bit. Only so much because of this. That is what you think wave 3 happens. Okay, so that's the psychological progression that we're talking about. They don't think that the trend's over. They try to buy it again and then it gives up in a major way, and we come down 161.8 to 175% the length of the first wave. So for me to start getting a little bit more to think a little bit more about this not being 5 waves down, because this would represent only the 4th wave. Okay, so of course we would be expecting as an Elliottician that. Okay, and the problem is if we get that, we would not consider that the end of the movement. We would consider a 3-wave bounce followed by 5 more waves, and that's definitely not what we want to see. Not impossible, but that is just how you would put the Elliott structure together. In terms of a wave 4 bounce, this would be the kind of area that you'd be looking for. So, even though we got above it, I mean, it's just kind of adhered to that, which makes me just a little bit nervous. Now, ultimately, what you want to do is come in and beat whatever would be the bottom of wave 1. So I really want to see the market get back above that, because once I see that, then I'm disqualifying that, and I'm a little bit more confident that this becomes a major sort of pivot low. And that we're actually, what we're going to do here is we're just going to count this as 3 waves down, and that is the correction. Okay. So putting all the fancy predictive models aside, that sort of area that I want to see defeated lines up with the 50. So, just that. All it's got to do is that. If it does that, I'm feeling a lot better about it. I'm feeling a lot better about its chances of maintaining the rally. UEC is an interesting one, right? I've seen a bit of propaganda around about 20 times, 20x this and rally to the moon that, whatever. I said in a video a few weeks ago the market's on sale, so you're 50% off the COVID low, and that's what UEC did. It retraced 50%. So that's quite a big drawdown if you're still long that. Tough to wear, but I don't know what to say. I mean, the markers were there the whole time. Okay, we knew that this rally, even though it was good, there was a chance that once it broke, that you could look back at this and go, oh, okay, well, look at this rally. It was picture perfect. Then we broke and we retested, and the whole time that was happening, the RSI was diverging. Okay, so there were classic signs here that this rally had enough. It was a lovely rally while it lasted, but all trends fail eventually, and this one did. We didn't quite retest, but we got close, and then we had a failure. So once again, we track, but you can see it to the naked eye. You can see the swing structure going in. Okay, so what do we need? Well, we need a higher low and a higher high. And once we do that, then we're going back going, okay, we'll put this together. This looks okay. So let's just zoom in here quickly and have a look on the short term. So we can just track the measured moves, right? So here's the first one. Up, down, target. All right, so that one was done. So let's move up to the next pivot. What do we got? You can get it there, you can get it there, got it there, and target. So that one's done as well. Next pivot. Where are we? Right now. Okay, it's sitting right in the middle of, well, just because we've wicked on the other side of it. So look, so far that is the trend structure that we'd want to see. So we got up, down, up, and then, you know, we sort of off here, we came up, down, up, and now we're doing the same thing here where we've come up, we're down into the retracement zone, which lines up with these top. Are we going to get back? Okay, so that's the game that we play on the short term until it fails. So this might be in danger of failing, and if that's the case, okay, we're coming back here now. We're looking at the longer time frame movements. Okay, so even coming back here, it's not a bad thing. It's like I said, that's that steady building blocks. Now the point of control here off the rally to the top is a little bit lower, but certainly through the retracement zone, we've got the supporting volume node, so that's fine. And we've got this structure in here, so this is kind of what we want. So at this point you could even get up even more close and personal to it, right? And you could sort of look at this and go, okay, well, do we get the three waves coming back the other way? Because that would be kind of nice. That would go together pretty well. Let's have a look. So even just looking at this move down, it'd be nice to see it move back and then that. Okay, so maybe it falls a little bit further, but any sort of these things that line up, and you can't force it. It's just a matter of if it happens, then that's great. So even looking at this, I mean, if you took like a 1-to-1 measurement of the length of this and projected, even if we took it off this as being the top and it goes down a bit further, we just kiss through the 61.8% retracement, so that's all right. But if it just got a little bit higher, if it just got up into this retracement and then even something like that, even if the 1-to-1 lined up at the bottom of that would be great. That would be the kind of thing where we're on a 30-minute. So it's, I'm not making a prediction here. It's just like, well, if that all went together and you're following sort of technical analysis or crayon drawing, as they say, that would be perfect. That'd be exactly what you'd hope to see. Okay, because you go, oh, look at that. Wow, man, I'm going along. Okay, that's what you'd be looking for. All right, I think I'll just leave it there. There's very little to say on the bigger picture other than it's just unfolding as we hope, which is just retracements underway. We just look at these little markers in between to see if we can hatch out a plan. So if the market does move the way we're looking for, well, hey, we've got a bit more confidence to go along. So that's it for this week, guys. Thanks very much for watching. I'll see you next time. Bye for now.